Hey everybody, it's Pete. How's it going? Hope you're having an amazing July 4th weekend. If you happen to be here in the United States with me, finally have some sunshine in Florida. It hasn't been the sunshine state. I think it rained pretty much every day for June. However, the market did not rain. We are going to be looking at a bigger basket of stocks to buy heading into the week, which is actually today, Monday, July 5th. There's a lot going on right now, but we're going to switch our strategy up a little bit today. Typically, we're looking for strength, a push, and a pause. There's quite a few stocks that are, we might use the terminology where if you bought those stocks, they might be what's called overbought right now and a little bit challenging to put on new trades. So the big theme going into the week is which sectors are the strongest and which of those stocks within those sectors make the most sense. And we're actually going to focus on two main sectors this week, and I'm going to walk you through that. We're actually going to do something a little bit different today where we normally start out with the market and then go down into the sector. So if you remember, we did a video last week, which I'll post the link up here. It's about a minute into the video of stock market power pyramid. So you normally start out with the broad-based market, work your way up into the sectors and then the industry groups. It's a little bit more broad-based right now. We could find two sectors where there's great opportunities to buy stocks. The stock market, look, the stock market's at all-time highs right now. It's not a question of whether it's a buy or not. It's a question of picking a side is easy and obvious. Picking a spot is where the challenge is probably going to be on Tuesday and Wednesday. But I think we have 5 stock picks for you. And you know what? We're actually going to get right into it because I want to make sure that I respect your time and want you to know how much I appreciate that you've chose to join me here this week. We do these stock picks for the week every Sunday. So if you haven't done so yet, click the subscribe button, hit the alert. This way you get the updates when the new videos come out. And if you find this stuff valuable, and especially if I can help you learn something new, smash the like button. I really appreciate that as well. So let's actually head straight over into the charts and really dive in quickly. We're actually going to look and we're going to do a rundown of how I'm working the charts this week and top down looking from sector. So obviously tech is at the top of the list right now. So whether you're watching the Qs or whether you're watching the XLK, they were off to the races and they have been off to the races. We actually mentioned quite a bit over the last 2 weeks that it's nice when financials are strong, but technology seems to be that sexy moment where the market becomes interesting. Amazon's at a breakout level now, which it has not been. If we zoom out on the longer term chart of Amazon, it hasn't done anything in almost a year, and now it's sitting right at those new levels, new CEO taking over, plus Jeff Bezos with his Blue Origin announcement. We could throw Virgin Galactic in there, and I guess we have become a Star Trek nation right now. By the way, we're going to talk about space in just a couple of minutes. So we're going to stick with working our way down through the ETFs. And the rotation is very clear. There's the haves, and then there's the do-nothings. We're going to stay away from the do-nothings and focus on where the order flow is going right now. We're just going to stick to piggybacking the smart money, sticking with the order flow, just finding a spot. The SPY, what's really interesting about the SPY right now is the consecutive gaps. How much more can the SPY continue to have bullish gaps without taking a breather? 6 out of the last 7 days, the SPY ETF was bought up on the open with a bullish gap. Thursday, Friday followed through and closed on the highs. Still ridiculously strong, still looking bullish. Again, it's not a question of whether or not it's a long. It's a question of whether or not the timing for new entries on Tuesday in these stronger sectors is smart. We're going to break that down right now, actually. But one thing I want to point out, which really makes things interesting right now, and we talked about this last week as well, is Dow theory, is when the Dow, the NASDAQ, and the SPY are all doing the same thing. Well, the SPY broke out, the NASDAQ broke out, and now the the diamonds are right at that level. So what's most likely going to happen, so write this down, what's most likely going to happen is the Dow's going to pop a little bit, the SPY and the Qs are going to take a little bit of a break, and then they're all going to be resting at a breakout level. And that's where we could really have a really amazing follow through. I do think the market, as I said last week, felt a little bit heavy. We got follow through into the weekend. Did not mean I was looking for sell shorts. I was still buying stocks. I was just reducing my position sizing and moving up trailing stops, such as the one that we called out 2 weeks ago in Home Depot. We're still working this one. If you remember, we had the 305 entry on this one as well. So again, continuing to work our way down. Working into consumer discretionary, we're going to take a look at semiconductor stocks. We're going to take a look at this pause in the SMH right at a breakout level. You can see that I make it green. Definitely a good habit to get into because it's a breakout level, very clean visually. Pop through and paused, which takes us over into a couple of other interesting stocks. We could take a look at Xilinx, AMD, NVIDIA, and one of our top 5 picks, which I'll give to you in just 1 second. But also the XLV. Again, if you're a member of our community, which I would really love to see you at least see what we're doing on the other side of the community, click the link below the video. Trade with me for the next 30 days. We have the most amazing community you could imagine. XLV broke out some really good, clean price action. The stocks that were leading the way, and these aren't the top 5 stocks, the stocks that were leading the way kind of paused. Moderna paused just a little bit, right? Lilly actually did follow through, not exactly exploding through there, but pretty good movement. So we're going to stick with this area here and watch the stocks that are already performing. The Moderna and NVAX, you can see again, Moderna 3 melted candles, okay, indecision. NVAX, again, very, very similar. NVAX, not quite breaking out. So melted candles are indecision. Indecision stocks pause. What happens after indecision? If there's order flow, you get explosions. So Lilly followed through. NVAX and Moderna did not. We're going to continue watching NVAX and Moderna to wake up a little bit. We're going to work our way over into, as promised, the top 5 stocks. But the one thing I want to point out today that's interesting, because I'm going to give you a little bit of a different twist on what we normally do. And this is really higher levels of professional stock trading, is if you feel the market is overbought, if you feel like some of the stocks and the sector specifically and the market are way up there, and you have to start to say to yourself, what are the odds of me making money on a new swing trade if I put it on now? And I'm going to show you the classic perfect example of that we did not take a trade in last week, that we are going to be looking for a trade now because it paused, pulled back, and gave us a better entry. So the breakouts right now and the follow through on some of these stocks that are up 4, 5, 6 days in a row, they're clearly a buy, but I'm not buying those stocks tomorrow. So what I'm going to do, I'm going to flip the script a little bit. And I've mentioned it a few times where we talk about the SnapBack trade. So I'm looking for stocks that have already been bought by the smart money, by the deep pockets. So that means they have existing order flow. But instead of trading the breakout or following up some of these stocks that have already gone a pretty good distance where the reward potential is smaller, we're going to be looking for strong stocks that have pulled back and flipping the script on the strategy. So instead of taking breakouts, we're actually looking for a lower opening on a couple of these stocks. If we get the lower opening, we're looking for them to come back and reestablish the order flow. That's otherwise known as profit taking. So we're buying after the profit taking, not chasing it. I'm going to show you the first stock that meets the criteria. It's actually going to be the top of the list right now. So I wanted to talk about that, flipping the script a little bit. I'll do the script later. I want to come back and give you what I promised, which are the 5 stocks I'm going to be watching, spending a lot of time on. Now, the biggest thing I want to get across here, I'm going to be talking specifically about levels that I'm going to be looking for. Some of them have to breach a level before I get involved. Other ones have to trade down to a level so that the reward potential makes sense. And I'm going to start out with that one, which is the first stock on the list today. So stock number 1 is SWBI. If you remember last week, we did a lesson on this. And let me actually put myself up here as well. Here. We actually did a lesson where one of our members on this day here was asking about buying it right there. And we were very clear, no, you're chasing it. I understand earnings came out. I understand the earnings was amazing. But remember, every single thing that we do as a trader, if you learn anything from me at all, it's that if we choose to accept risk, we have to accept risk because the reward potential is likely, not definitely, but likely. And the better job we do of building that argument of, and I want to buy it, I want to buy that stock because of this, and because of this, and because of this, there's a good chance it's going to move in that direction. Then we choose to accept the risk because that risk is commensurate with the reward, right? Everybody knows risk, reward, probability, right? So this stock at that moment did not meet that criteria. So we let the trade go. And we talked through all of the argument why it wasn't a buy. We said we needed the stock to have the profit taking, pull back, and then give us another good entry. And that's actually what we have now. So it rallied up close to 40, has now pulled back all the way down to the mid 30s. So it's almost a $10 pullback. So what I'm actually looking for, again, this is one of those reversing the script trades where I'm actually looking for $30 or better in SWBI, and that's where I'm looking to initiate my trade. So I'm actually looking for it to push down. That expands the profit potential between where I could buy it and where I think it could rally back to, and that's where SWBI makes sense to me. Stock number 2, Qualcomm. Qualcomm, we just gave you that big list of semiconductor stocks. We took a look at the SMH, rallied pretty cleanly, holding above the level. This looks great right here. Again, all about probability. Nothing's definite. So looking at Qualcomm meets all of the criteria where it has not expanded. There's still meat on the bone. If we take the risk right now, if we choose to accept the risk is defined, and you can see the profit potential and how much room there is to go. So we're looking for Qualcomm to at least get over that 143 level before we look to get involved. And you can see that there's multiple levels of profit. Next, we're going to move over to stock number 3 that we're looking to buy, which is energy stocks. So we're going to stick with a stock that was on fire, no pun intended. Just to give you an example of what it did on Thursday. Again, whether you're day trading stocks or swing trading stocks, just amazingly strong on Thursday. Paused a little bit here, did absolutely nothing on Friday, but that gives us a chance now to put the stock on, to put a new trade on, and looking for it to blast through 100. And we're looking to see at least $10 through that 100. So above 100 and then up to that 110 level. So working our way over into a strong stock that paused. Remember, we talk about contraction in volatility, which is a pause. You often hear me say push and a pause, a push and a pause. We want to get involved on the pause and make money on the push higher. So when you buy that stock, it pushes up, and that's the next level that you're looking to book your profits. FANG is the next stock that meets that criteria. Going to work our way back over into CRM. CRM is an interesting one. This is one I want to be clear. I'm going to be working the order in this a little bit because the weekly chart looks good, but I want to see a little bit more of this. I want to see if you know our terminology. You know, we talk about well bid and well offered. Last week was a good start. We closed on the highs. We broke out of previous levels. We broke this downtrend. All of the order flow is starting to look a little bit better, but this is critically important. I want to make this super clear. I absolutely am looking to trade CRM. I absolutely think CRM has plenty of room to go, but because it's the beginning of new order flow, I just showed you the chart. We broke that longer term downtrend here, finally broke through that. It's the start of new order flow in that direction. So what we need to see now, we need to see conditionally pushing higher. We need to see Tuesday and Wednesday be well bid, higher highs, higher lows, closing on the highs. So I want to make this clear. I love this stock. I'm watching this stock this week. It meets all the criteria for the start of a new move in that direction, but I am working the order in pieces. This is critical. When you have what's the word I'm looking for? When you have established order flow. So in other words, it's more than just a couple of days. It's maybe 2 weeks, 2 weeks of higher highs, higher lows, 2 weeks of smart money, deep pockets, paying higher prices, closing that on the high for 2 weeks, 3 weeks, 4 weeks. That's established order flow. You could lean into that with a little bit more conviction. You could say, yeah, they're buying it, they're holding it. I'm going to piggyback. Right now, this is the first signs of that. So what's the risk reward here? The potential longer term reward on this trade in CRM is that this is the reversal of the order flow, and it's going to now continue a nice bullish move to the upside. If we buy this stock, I'm going to be buying it because it's the start of this order flow in a piece. Jesse Livermore talks about this in all of the trading that he does. He called it probes. You put out the first piece of a trade, and then you get feedback from the market. CRM is a classic trade like that right now. Again, going back to Jesse Livermore, if you didn't buy that book, Reminiscences of a Stock Operator, he was looking for when a stock broke the line of least resistance. So CRM meets that criteria, but we're going to be very clear about this. Professionals work the order the first time. So CRM looking for it to break through and hold. So first piece on Tuesday. Next, and the fifth stock I'm going to be keeping an eye on is one that I've been talking about for a while. Was one of my favorite setups last week over here. Did not trigger. We just let it go. Did not give us the entry signal. Now has worked its way back. So I'm looking for D-Dog over 107.50, looking for this to run up to the 119 level. I want to throw in a bonus one that is kind of still sitting right at that level. Just keep an eye on DocuSign as well, resting comfortably right near all-time highs. Not in my list today. I have some other ones that really liking today, and those are the ones that are actually at the top of the list today. I do want to give you as a bonus right now, I want to get the top 5 in your hands right away. I want to give you a bonus of some of those stocks. Remember what I said, we're flipping the script right now where the breakouts might be a little bit too far. So I'm going to be going the other side where strong stocks that have pulled back, I'm looking for a lower opening to see them turn around. So I'm just going to give you a couple that you can watch with me during the week to see how they play out. It's pretty cool. So we're actually looking for them to open lower on Tuesday, reverse, and then have a nice 3 to 5 day rally for a nice clean swing trade. They have to meet both of that criteria though. So if we work our way over, the number one stock that meets that criteria for me on Tuesday is PACB. You can see push and a pause, a push and a pause, a push and a pause. Close near the lows on Friday, and that's fine. I'm looking for a little bit more selling and then reversal, and to see this rally beyond 36 and up into the mid 40 level. And the other stock that meets this criteria for me, I just gave you before, which was SWBI. So we got a pretty good list heading into Tuesday. I don't really think there's any major news coming out. So I think it could be a good, clean week of trading, everybody coming back from the holiday. I want to really remind you, though, about what I just talked about, position sizing. When a stock breaks a new trend, so it broke that downtrend that we're talking about in CRM and goes to the upside, it's critical that if you want to take your trading seriously, which I know you do, you want to act like a pro. We talk about this all the time, act like a pro in our community. Position sizing is everything, and position sizing should be based on probability of follow through and how established that order flow is. And they usually work hand in hand. So I want to be clear on that CRM trade. If it breaks out, we get our first piece on, it pulls back. It's not going to be a big loss because we're waiting to get feedback before we lean into it a little bit better. So there's some stocks that have established monthly order flow, other ones that are just getting started, and those are the ones that you work those orders in. So thank you so much for choosing to be with me today. I really, really appreciate it. We are having a webinar coming up, so if you could please do me a favor. First, if you have any questions about the stocks that we talked about here today or the concepts, please leave a comment below the video. I'll be more than happy to get back to you. Let me know in the comments so I have some more ammunition or content for the next webinar that we're going to do. I want to know how I can help you the most. What do you believe is holding you back from being a more profitable stock trader? Leave that kind of stuff in the comments, and that's going to be the content that we're going to have in the upcoming webinar. And you'll see a link here, an announcement here for when the webinar is going to be, so you can join us. So have an awesome finish to your July 5th weekend. I know I am right now. Today, July 5th, July 4th weekend. And relax, get a good night's sleep, and let's head into another short 4-day work week of trading and have another awesome, awesome week. If you happen to be in our private community, if you're in the Swing Trade Tracker, if you're in the Order Flow Bootcamp with us, I just want you to know, especially here on this holiday weekend where everybody's grateful, I want you to know how grateful I am that you're in the private community with me. I think that we have the most amazing people I just love to hang out with every day. And if you're not in our community, click the link below. I'd love to see you on the other side too. So have a great day, everybody. I'll speak to you soon.